It is Money Monday, and on Friday, the IRS announced new tax brackets for 2026, which includes inflation adjustments. Here to break down what it all means and explain when it goes into effect is our money man, Paul Hood. Paul, good to see you.
Good to see you.
All right, so the IRS, they do this every so often, but this one's kind of a bigger deal, right? Explain that.
Yeah. So we have a progressive tax system that says the first little bit of your income is taxed at this rate, then another rate, then another rate, and then when you finally get to the top, they make a big jump that phases out all your the lower rate, so that you're actually on a fixed rate. But they do give us what's called a standard deduction. You know, people can itemize, so that your charities, your mortgage interest, your property taxes, those kind of things. You add all those up to see if they exceed the standard deduction. You take the larger of the two. Trump's first term, that tax bill came out and dramatically increased and it really simplifies tax returns, and with an intent that increases a larger portion of people that can file their own tax return, because if you can't itemize, then and you have a job, it's pretty basic. So this year with the big beautiful bill, they bumped it up even more. And so you got a higher standard deduction. Standard deduction means you have a higher amount of income that is tax-free, that you don't have to pay taxes on, regardless of what deductions you have.
So will this help people in the long term? You said that maybe in Oklahoma it could hurt people at first, but there's a new state law too, right?
Yeah, so in the past, if you took the standard deduction on the federal, you took the standard deduction on the state, but the state standard deduction was dramatically lower. If you itemized on your federal, you got all of those deductions on your state. So a lot of people would voluntarily, that knew what they were doing, would voluntarily take less on federal to get more on state. Mm-hmm. Now, this effective 25, the state's standard deduction is basically the same as the federal. It's a big boost. So it just means we have more taxes, more income that's tax-free. Now, one thing, Coop, that I want everybody to know is effective September of 25, the IRS is going to start phasing out sending out paper checks. Mm-hmm. So when you file your tax return next year, you're going to have to give them your bank account information you want direct deposit. They may be doing the little, cards like the state of Oklahoma does. Mm-hmm. Some people can maybe you do prepaid debit cards to be able to give them your number, but under most circumstances, you're not going to get a check anymore, so we need to be prepared for that.
All right, big changes. And this is for the 2026 year, correct? So it's not when you file your taxes in February, it's going to be for the next year, right?
So
for the changes.
No, the changes were the big beautiful bill are for the return that people will file after January. Then it bumped up again in 26. So it went from 15 to 16,000 for single people, 31 to 32 for married people.
Okay, all great advice, all great stuff as always. Paul, thanks so much. And we'll be right back after this break. Stay with us.